Okay, good evening, everyone. I just want to give a quick market update on the market internals. I'm trying to push the market internals to be something where people really grasp and learn, because this is the epitome of trading. Every professional trader out there, if you ever do join their services, they're gonna talk about market internals, and you want to learn it before they talk about it, so you have some understanding of what they're doing. But I do the interpretation a little bit more. A little bit similar to how I profile soils, because I am a soils mechanics specialist, I guess. But yeah, here we have the ticks on the 10-minute, and you can see that the line here, the outer edge is green, indicating buy program stepping into the market around 10:10 a.m. Eastern time. And then on the shorter time frame, you can see several instances where the buy program started to come in on the shorter time frame. On the advanced decliners, you can see that the morning, the market did really take a huge dump. We had those strangles that paid off, and it could have paid off more had we known, held on to those positions just a little longer. But then at the end of the day, 1 hour before the market closed, the market started to rip really hard. And then as it ripped harder, the trend dropped all the way down to 0.86, indicating volume was kind of becoming a lot lower. And with the trend hitting 2 around 9:21, that is when I posted expect shorts to cover 1 hour closing bell, basically 1 hour before the market closes. You want to expect. You see, I identified it at 8:37 a.m. which is at approximately 8, 9, 10, 11, 11:37 a.m. Eastern time. And then here the trend spiked as high as 9:27 a.m. I think that's Eastern. Let me just double check with this time frame here. Oh, that's Pacific. So let me just put on Eastern. There we go. Should always be on Eastern, right? So I alerted at 8:37 a.m. That's 11:37 a.m. and that would have been right around here. Okay, so that's where I indicated that there's going to be probably shorts covering, especially when everything was dumping like 9-10%. I couldn't believe Tesla was down almost 9%. Nvidia, this is, having seen the futures trade up as high as 1% last night, quickly reversing and trading lower, and then the market continued to sell off. And you can see the reversal candle here in the S&P or the NASDAQ forming this magic mic. So there is vulnerabilities for this candlestick to break through the open and then just ride down that magic mic pull and forming a nasty daily candle. Okay, that's probable. And anything's possible, but we do have Jay Powell speaking on Wednesday, and I think they're going to save that for. I'm not really sure what to expect from the Jay Powell event. More clues will come in when we see the market internals, produce Tuesday's numbers. But the put call ratio is quite high, okay, and then the VIX is the main issue. So the VIX is going to be the biggest clue going into Tuesday. If the VIX starts to reverse from +3 to -3 and starts dumping hard, maybe going back and retesting, say, this 21-day moving average, then we could see a very long and directional day, and that would push the NASDAQ from where it is right now and make it possible for an ET up to the 21-day moving average, and that would be the rip your face off rally. So a rip your face off rally after 4 consecutive red days in a row, plus the 5th being the massive sell-off, could produce a short-term rally where we get an ET and then roll over into February or into Apple's earnings, because that's going to be the kicker, right? Apple controls quite a large component of the S&P and the NASDAQ, and if their earnings is not great, then that's going to provide the S&P enough reason to fill the 4,000 gap. S&P is currently trading 4,365, so that's another 365 points to drop for that gap to fill. once the gap fills, I expect the market to form a bottom and base there for a while and then rally all the way into the end of the year. Okay, so that's the market update for now. Here the volume at the open. We got the buy the F and dip on Friday. Futures rallied for the first on Sunday, up 1%, and then it quickly turned, and all of a sudden we get the initial spike here where volumes rushed in. However, that was just because the buying that came in on Friday after hours, that created the initial gap up on the volume UVOL DVOL. However, you can see it quickly tapered off in the first 30 to 60 minutes, and then proceeded to move all the way down to the buy the F and dip level 2, tier 2 again. Okay, and then once it got there, we saw the trend hitting 2, and then it started to rip up right into the last hour of the day. Thank you very much and have a great day.